Good day, my name is Christel from Frans, Klerk Independent Technical Analysts. Charles wanted us to kick off the show with Dischem, and he was quite despondent because he bought the share around 34 Rand, and for him, it just has been a downside trend all the way to where it started to look like as if it's building a base and is trying to find a foot. Now, this double top formation that was confirmed there around 23.94, and maybe I should draw it in for our viewers, that double top, even if it was in a downtrend, has played out completely when that neckline changed into a resistance. So now it's a matter of trying to find out where the share would start to build a base or a foot again, and where Dischem will start to reach for higher levels. I've used a Williams R indicator, or some analysts call it a Williams percentage R indicator, to highlight oversold or overbought levels on the instruments. So we can clearly see that this Williams R indicator is in oversold territory, and that means that the probability of the instrument to reach for higher levels is more likely. So at the moment, we know there's a probability for a bounce, but at the moment, Charles, I don't have any turnaround candle or any turnaround pattern that can, or a higher low that can confirm that there is a possible turnaround. The only thing I've got at the moment is a possible dragonfly candle, and I call it a possible because this is a weekly graph, and this candle will only close or be finished by Friday. So at the moment, I've got a candle with quite a long lower shadow, which means it can be a possible dragonfly candle. And we know dragonflies are early in the morning and they take the water and then they fly away. So let's hope that this is a possible dragonfly candle, and by Friday you will know whether it is or not. But then your first sign of optimism will be above that candle around 21 Rand 36. If you want to use a stop loss, if you want to top up, you can use 1988. But this dragonfly candle will imply that maybe the next candle would be a bullish engulfing or a bell hold line, some confirmation that there are buyers that have started to buy in weakness. We can see it's still trading below that red line, which is the 40-week moving average. And we know as long as the instrument consolidates below that 40-week moving average, the long-term sentiment towards the share is negative. So at the moment, wait for that dragonfly candle to close maybe. Even if you want to maybe wait confirmation for the next candle to see if it's also a positive candle, and then maybe start to add to your position. I don't know in total, if you maybe might be overexposed if you add to the position, but at the moment, I would have my eye on this possible dragonfly candle, see what the next candle does, or if you are unsure, then maybe wait for a higher low. So wait for, okay, we've seen a pullback, wait for a bounce, let it pull back, but don't let it go as low as the previous level of support. And when the share starts to change that previous resistance then into a support, that would be a higher low. And that might be confirmation that, hey, I think the buying power is back in Dischem. Eben wanted us to look at Anglo Gold, and we know all the gold shares have rallied massively to the top, and it seems as if there is just no stop to it. And Eben, Anglo Gold is no exception. The momentum to the top is clearly in place. We can see that this breakaway gap is still there, and that gap is waiting between 285 Rand 77 and 285 Rand 19. So it's a very small gap there, but it's still a gap. That means the share might trade, come back, pull back a little bit, close that back gap, and then bounce again. But if I zoom out, and this is still a weekly graph on Anglo, and I've drawn in here quite a strong resistance level that's now changed into a support. And we can see that level was tested around July 2016, and previously it was very close to the 40-week moving average, where it either found resistance or found new support and rallied. Now, this is a massive possible double bottom. And I mean, I'm saying massive because it started here around, let's say, June 2012 to around July 2016, and again around here August 2019. So it's about a 7-year period where this possible double bottom was confirmed. And we know that that the target of a double bottom is normally the length of one of the legs and I'm going to use the right leg here, projected upwards. So that can take Anglo Gold to 520 Rand 53. But bear in mind, Eben, that Anglo Gold has built this possible double bottom, now a support, over a 7-year period. So it can take maybe another 7 years, if not less, or longer, to trade this pattern out. But what I am concerned about with Anglo Gold at the moment is the fact that all our gold shares are so overbought. It means that the probability of the instrument of the share to maybe pull back first is more likely. So I mean, I would assume that you're currently in the stock and that you want to exit at some stage. But at the moment, as long as Anglo Gold continues to consolidate above 310 Rand 99 on a weekly close, I would be fairly comfortable to keep the stock. However, bear in mind that it can easily retrace, come and close this gap, and then bounce even further. What you can do is you can look for other levels of support to see whether the share, as confirmation, where the share will run out of steam. And then obviously that 40-week moving average is your main indicator. As long as the instrument consolidates above that 40-week moving average, the positive sentiment towards Anglo Gold will be in place. But bear in mind, it is very overbought, so it can easily retrace. But we can't look at the gold shares without looking at the gold index itself. And we can see that the momentum to the top is in place. Yes, it is overbought, of course, because it's rallied so much. But more importantly, last week's spinning candle, and that is a spinning candle with shadows of almost the same length on both sides of the real body, tells me that there is indecision. It tells me that the buyers and sellers are looking each other in the eye and saying, who is going to win this battle? Yes, it is overbought, but the spinning candle tells us more that they've taken a pause and are not sure what they want to do with this gold price. Now, technically, first sign of weakness will be below $1,480. Now, this is a weekly graph again, so that $1,480 needs to change into a resistance on a weekly close for me to start to be say to myself, maybe the gold price wants to retrace again to previous support levels there around 1,450. But the momentum to the top is clearly in place. And then obviously when the gold price starts to consolidate above $1,535 again, I would assume that the momentum can escalate and that we can see higher levels. I am a bit concerned about my overbought territory, but remember on the Williams R indicator, it's the minus 50 level on the indicator that is a crucial level to say, I can assume that the instrument can escalate to lower levels when that minus 50 level changes into a resistance in this case. And again, at the bottom, when we can assume that the momentum to the top can escalate when the instrument or when the indicator starts to change that minus 50 level into a support again. So have a look at this minus 50 level on your Williams R and keep that as a confirmation to say maybe it can escalate when that minus 50 level in this case changes into a resistance. But I mean, the momentum to the top is clearly in place, and we can see that this gold price has no stop to it at the moment. What we can maybe do is just, other than drawing support or resistance levels in on a manual way, we can use Fibonacci levels to identify where is support and resistance. And remember, as technical analysts, support and resistance tells us where the buying or the selling power is lying. Why? Because there's only more buyers that can lift an instrument's price to higher levels. And it's only when the sellers come in that the instrument starts to retrace. So we can see at the moment that the gold price is at that 61.8% level. So when the gold price starts to consolidate above and keeps it above $1,509, $1,510, we can assume that the gold price can maybe reach for that next level, which is at $1,633. Now we know the only thing that can lift an instrument's price is more buyers. So there needs to be more buyers that gets into the gold price to lift this instrument. However, the next strong support that is waiting there at the 50% level is at $1,420. So even if the gold price starts to consolidate below $1,420 on my Fibonacci support, I I might become a little bit despondent and say, maybe it's time to bank profit. Maybe the gold price is going to retrace further. And then, as I said, keep a minus 50 level on the Williams R as confirmation. Harmony, another gold counter that just rallied to higher levels and has almost got no stop to it. But again, the support and resistance levels that I've drawn in here can act as confirmation and levels to make decisions. A clear gap and a big gap is visible on Harmony. And that window or gap is waiting between 39 Rand and 1 cent and 40 Rand and 41. That is a massive gap. Now, the rule around gaps are, or windows, it's the same. If the momentum to the top, we can assume, that the momentum to the top will continue as long as that gap at the bottom is open. So we can assume as long as that 40 Rand 40 levels, 40 Rand 39 level remains a support, that the momentum to the top is in place. So again, we can highlight support or resistance. The target is 57 Rand 51, and then obviously that strong resistance that was found around July 16, they're around 65.44. And then you can use the first sign of weakness will be below 43.49, which is clearly a strong support and resistance level if I look at the history of this candle. So at the moment, momentum to the top is in place. First sign of weakness below 43.38. Keep an eye on that window. See if the instrument, if Harmony doesn't go and close it. Otherwise, don't try to chase it. I think you're too late. We can clearly see that it's still extremely overbought.